Good morning. It's Monday, March 17th, 2025. I'm Zach Howard. Here's your 3-minute morning market update. First up, number one in my notebook again to start the week is gold. Doing its thing, crushing it from an overall alpha standpoint when we look at it through the lens of all other assets. Even more so, we beta adjust our portfolios to have less exposure to those higher beta names. Gold is significantly outperforming and being that safe harbor time when we have chaos and uncertainty continue to escalate. The gold volatility continues to fall relevant to US equity volatility. Gold continues to be a truth lens when we look through the fiat money prices of equities, which are extremely overvalued with all this money creation over the last 5 years. The S&P 500 to gold ratio 1.88 continues to fall and has much more room to fall closer to its long-term historical mean of 1. Equity prices, S&P 500 levels, they are monetary illusions of that fiat money. If we look at anything measured to the price of gold, it's more a truth of what's actually happening, and it's the debasement of currencies being reflected in these higher nominal prices. So look at stuff to the price of gold. Higher highs, higher lows, and also silver continues to be in a bullish trend, joining its role with a debasement leading indicator with gold. Its cousins, Dr. Copper and natural gas in the commodity sector, also pointing to higher lows, higher highs in a bullish trend. Both have much more extreme volatility than gold, so be careful of the big ups and downs. But we are continuing to get mixed signals from copper and natural gas as it relates to the biggest inflationary, disinflationary commodity, WTI oil, which continues to struggle, lower lows, lower highs in a bearish trend, indicating confirmation of slowing growth and slowing inflation into Q2. Volatility on Friday pulled back. We still have a really large range of 20 to 30 on that VIX, the S&P 500 volatility. Had a big bear market bounce on Friday in US equities. However, it came on the backdrop of decelerating volume, just 9% of the last 30-day average volume in US equities. So not confirming anything more than a bear market bounce. Equities bounce the most in bear markets, so keep an eye on this, especially as volatility continues to be elevated. You're going to have these big up and down days in the short term moves. Europe continues to outperform US equities. Bitcoin trying to rally, but it is still in a bearish trend and correlated strongly with those QQQs and other higher beta assets. Speaking of which, the altcoins continue to live up to their name as shitcoins. Extreme volatility, cannot muster anything even on these weekend pumps. Staying away from chasing waterfalls, as TLC taught us in the song from the 1990s. On to Canada, my home country. Mr. Central Banker himself, Mr. WEF, Mark Carney, now new enacted Prime Minister, probably announced his election date here today, finally, for our country. Expect massive fiscal spending announcements here in the next couple months leading into the election. The Canadian government has much more room to spend deficit percentage of GDP relevant to the US in the next 12 months. The US is going in the opposite direction of trying to get their house in order fiscally. Canada is going to stimulate and spend that fiat. Look through the price of gold measured in Canadian dollars over the next couple of months and get a feel for how the debasement of the Canadian currency is going to accelerate in that backdrop. That's what I got for you today. I will see you tomorrow. Have a great week.